between tangible and intangible. Tangible asset means the asset which you can see, touch, feel, you can value it easily. That is called tangible asset. And intangible asset which you cannot touch, value, you cannot feel, they are called intangible assets. Example, tangible asset, furniture, machinery, building. These are all tangible assets. And intangible asset which you cannot see, goodwill, trademark, patents, etc. So all types of assets of business come under real account. These are the examples. Now comes the golden rule. The golden rule of real account is debit what comes in, credit what goes out. Now let us understand what does it mean. Credit what goes out. When you will debit, whenever something is coming into the business. So debit the account which is coming into the business and credit the account which is going out of business. So the rule is simple to understand. Debit what comes in, credit what goes out. Now for example, if you purchased goods, goods are coming into the business. So they will be debited. So goods comes under real account. Cash comes under real account. Now last and third type of account is nominal account. Now the account which is not person, which is not real, is nominal account. These are called fictitious account because they are created for the purpose of accounting. So you cannot see these account. Fictitious accounts. No person is involved, no asset is involved, they are fictitious. Now all types of expenses, losses, income and gain which are created for the business, all types of expenses incurred by the business, all types of incomes received by the business, gains made by the business and losses incurred by the business come under nominal account. They are fictitious, they are created for the purpose of accounting. So for example, rent account. Rent can be income or expenditure of business. So rent account, commission account, n number of expenses, electricity expenses, telephone expenses, office expenses. All these accounts come under nominal account. Now what is the golden rule of nominal account? Debit all expenses and losses and credit all incomes and gains. Now let us repeat the rules. Personal account, all types of person come. The receiver will be debited and the giver will be credited. Real account, whatever is coming into the business is debited, whatever is going out of business is credited. then all types of expenses and losses of business are debited, and all types of incomes and gains are credited. So this particular chart you have to keep in front of you for initial practice of journal entries. So what is journal entry? Recording business transaction into the books of accounts. Now we are going to start with the primary book or book of primary entry, which is called journal. So journal is the book where the particular transaction is entered first. Now we will see what are the steps of journal entry. Now the when the business transaction is given to you, you have to read the transaction carefully. You have to also think about in whose books of accounts you are passing the entry. Now suppose the entries are given, you are asked to pass journal entries in the books of Ram. Then what you have to do first? You have to think from Ram's business point of view. Every transaction you have to think from Ram's business point of view. So first you will read the transaction carefully. Then second step, you will find two accounts involved in the transaction. As we have seen in the principles of double entry bookkeeping as well as dual aspect concept, every business transaction involves two accounts. So you have to find out two accounts involved in the transaction. Step 3. We have seen this particular chart. So you have to classify the account as personal, real or nominal. We have already seen examples or what type of accounts come under these three headings. So you have to classify the two accounts which you have found out from the business transaction. After this, you have to apply the golden rules, which we have seen for three types of accounts: personal, real, nominal. So you have to apply the golden rule and decide which account will be debited and which account will be credited. And then once this is decided, you have to pass journal entry and summarize it in the narration. Then we are going to see format of journal and how the journal entry is passed in the journal. Now initially we will start with the examples that how to pass journal entry. Now first transaction we will take. Mr. Raman purchased goods worth rupees 5 lakh from Mr. Rajan. You have to pass entry in the books of Mr. Raman. Now step 1. First you have to think the transaction from Mr. Raman's point of view. So what is the transaction? Raman purchased goods worth rupees 5 lakh from Rajan. Raman has purchased goods. So step 1, find out two accounts involved into the business transaction. Purchased goods, so it is goods account or purchases account. Second involved is Mr. Rajan. He has purchased goods from Mr. Rajan. So it is Mr. Rajan's account. Now we will apply next step. Two accounts involved. Now we have to apply the next step. We have to classify the account personal, real or nominal. Now goods account, as you can see, it is a real account. So step 2, which type of account it is? real account. Next account involved is Mr. Raman. So as you say, or whenever any person is involved, it is a personal account. Step 3. Apply the golden rules of account. Real account, the golden rule is debit what comes in, credit what goes out. Now debit what comes in. Now you have to ask next question whether goods are coming into the business or going out of business. When you purchase goods, goods are coming into the business. You will debit. Now Rajan's account is a personal account. What is the rule? Debit the receiver, credit the giver. Now, you have purchased goods from Rajan. So, for business, Rajan is giver of goods. His account will be credited. So, how to pass entry? Goods are coming in. Goods account debit. The amount is rupees 5 lakh. To Rajan's account. 5 lakh. Now, for every transaction in journal, you have to write a narration. Narration is the same transaction in brief. So, the narration is written like this. Being goods purchased from Rajan. Amount is not written in narration. So the narration is being goods purchased from Rajan. So this is called journal entry. Now afterwards we are going to see the classification of goods account. We will take one more examples. Just now we have seen goods account. Why? Because you should understand whether coming in or going out. Now we will see in practice how the goods account is classified for convenience. Purchases account, sales account,